The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with your host, most squeezably soft David White, on April 9th at the headquarters of Technical Trading and Investing, TFNN.com. As always, we're going to have a great and wonderful show. In history today, we remember that General Lee surrendered on this day, surrendered 28,000 of his troops that were cut off to Union General Ulysses S. Grant, effectively ending the American Civil War. And I just watched Lincoln on Saturday night, the movie. I thought maybe Steven Spielberg was done making good movies, because everything I'd seen kind of lately that he had touched was pretty bad. I will never forgive him for the last edition of Raiders of the Lost Ark and some of the other horrible stuff that he's put sticking his fingers in. But this is actually a fairly decent movie. But what can you say? Anyway, it's hard to think that 150 years ago we were at each other's throats, father against son, and what it actually come to mean after all this time. One union under God. Anyway, what do we have going on? Pretty much waiting for earnings in the morning. We have a handful of stocks, mostly in the morning, nothing really exciting tomorrow afternoon. Thursday brings on a whole new round of stocks. CarMax, KMX, Constellation Brands, STZ, Family Dollar Stores, FDO, Jinko Solar Holdings, JKS, and Bed Bath & Beyond. And you always just think you'll go into Bed Bath & Beyond, into that back door, and open it up, and it will just be an infinite universe. Just be able to just be everything. There's got to be something beyond. It's Bed Bath & Beyond. They'd get sued if it was false advertising to name themselves. There wasn't something beyond the back of that store. Anyway, all those in the morning. We'll try to take a look at them a little bit later. We've got lots of IPOs and coming out this week. Some of them small, some of them big. Chimerix, which is a antiviral drug for use in stem cell transplants. Pretty small, $85 million, somewhere between $13 and $15 on Thursday. Evertech, a leading full-service transaction provider in Puerto Rico and Latin America, trying to raise $400 million, somewhere between $18 and $20. We also have Harvard Business Apparatus Regenerative Technology, HART, bioscience carve-out focusing on regenerative medicine, plan to raise $19 million. So a tiny IPO out there at 1.7 million shares. Which is Offshore Partners, KNOP will be the symbol. It is a limited partnership. Make sure you know what those are when you're looking at these. Most of these are basically almost like a bond. They have something like oil wells or something else, and they plan to give basically dividends back. And don't look for the stock to appreciate a whole lot. Anyway, KNOP supposedly out this week. Omeretha Pharmaceuticals will be OMTH. This has developed a prescription fish oil capsule that reduces triglyceride levels. Plans to raise $75 million. Again, fairly tiny, 5.8 million shares, 12 to $14. Rally Software, RALY, provides a cloud-based software to agile development-based software. Agile software is just a school of a way of developing software that is very, how can I say, just very transformable very quickly. especially in an industry that may change very rapidly. Doing a little bit of work up front makes it easy to make changes later, and it's just kind of a development philosophy that has you kind of go way down the road and think about how things may change before building that. Again, fairly small, 11 to 13 bucks. Taylor Morrison Home Corporation will be TMHC, leading home builder in the U.S. and Canada, backed by Oaktree. I suspect this is the one we're probably going to be looking at this week, and the ones that the CNBC talking heads will yell and scream about. Going to raise $500 million, offering 23.8 million shares, 20 to 22 bucks. TMHC, if you're looking for one to play on the opening day of the IPO, that would be the one I'm looking at. I didn't even get to it. I've got to get my ducks in a row out here because I didn't even get to my wonderful audio clip. Here it is. Breaking the law, 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 breaking the law. Well, we've got people breaking the law. And once again, there's a reason why the stock price tends to push ahead of news coming out on it. Today we found out KPMG, which is one of the big four accounting firms, that is no stranger to happening to them. I think this happened 4 years ago. But one of their lead audit guys, the head of the audit committee for both Stretchers and another company, I'm trying to think of it right now. What's the name of it? I'll think of it in a minute. Informed the companies that it had resigned as their auditor on Friday because they found out that the lead auditor working for them had been basically telling traders, and traders were actually putting out actual trades based on what this auditor was telling them far in advance of it being released to the general public. And I'll think of it in a second here. Maybe someone will tell me in the die. But yeah, it is rather interesting. But what we do find out, of course, is we've had two of the biggest fat cats on Wall Street fighting over some of these stocks. And the question now is, well, at least we know one guy's going to jail. And that's going to be the guy that basically disseminated this information for insider tradings. You know, whether he got money back or something like that, it's going to be interesting. But the question is whether or not we saw Icahn or somebody like Ackman get it. From the release dates that I've seen so far, it would look like Ackerman, who started his short a year and a half ago on Herbalife. Now, in fact, it's just up here, Herbalife. Would be rather interesting, because that would be about the right time frame for Icahn. And the question is, did somebody like that actually get involved in finding out information before the general public? You know, I have no inside knowledge. Only the timeline would say that it would be much more likely that Icahn was the recipient of this information than it was Ackerman. That's interesting. AMD, a nice little pop for it earlier today because they're going to be using the Xbox 720. More amazing is that Microsoft actually popped on the news, and probably a little better for them. Intel is probably also a little better off for AMD being kept alive. Most people don't remember, but if Microsoft had not invested $400 million in 1998 in Apple, there would be no Apple today. It was on the last legs of actually going anywhere in this, and actually being in the market. Bill Gates, at the time still CEO, decided that he was better off having an Apple, and you know, they were already knee-deep in the extortion plot for getting money out of them from basically Washington bigwigs. Up until pretty much 96, tech companies were kind of immune to politicians getting in their business, as it was. In the 96 election, it brought in a lot of Chicago thuggery, and they basically came up and gave him a Godfather kind of ultimatum to supporting a candidate. Bill Gates said no, and pretty soon they were embroiled in antitrust litigation. I have very little doubt that if they would have paid off some of those Chicago thugs, that they probably never would have gone through it. But what can you say? Now it is common practice, and there's a whole bunch of new people to extort for political campaign donations. So as long as you have a separate company out here, in the case of Intel, it is AMD building chips out here. It is a great case for them, and probably better news for Intel than it is for actually AMD being in the Xbox 720. So, just some things to think about. We did have a question in the den. You can also always email me, and if I get the question before about 12:30, I'll be glad to bring it on the air. Or you can call us at 877-927-6648. But we do have a question, and that is whether or not Coors would be a buy here. And I hadn't looked at the chart here today. We talked about it a little yesterday as one of the stocks that looked fairly good. Back in here, and it had bounced up yesterday. You know, I'm just not a fan of buying these stocks way up here at the highs in this market. You know, if the market is indeed going higher, I am not resigned to that fact. When we let's go ahead and look at the S&P here right now. Okay, 1570 on the S&P cash. We have 2.1 billion shares. So there's nothing in here that makes me think this is going to be great. Some of the information I'm already reading and the forecast shows that instead of being up 2.1% overall on earnings for this route of the S&P 500 earnings season, we will be down 0.5%. So in the last 6-7 weeks, we've gone from up 2.5% forward looking to down 0.5%. I suspect we're going to continue to see a lot of negative news hit the wires over the next probably 60 days, something like that. Almost everybody moving their forecast down. I can't really be a big favor of buying any stocks up here. If you were going to buy one, this one actually looks the best of the bunch. It's got a high volume high out here that has not been tested, and it's pretty much close to support. If you could get back down to 55, I'd probably, that's where I was looking, I'd probably, if you could just get a little pullback in here, volume can remain light, I'd try to pick it up at 55. We'll be back in a minute. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Gold Fields. For more information, just click the Gold Fields banner on the front page of TFNN.com.
And as we come back, just looking at gold today, it was, what do we have out here? Did I have it? No, don't have it yet. Normally I have the pit closes here. And we'll look at it in a minute. We've got Max from Houston on the line. How you doing today, Max?
I'm doing just fine, thank you. I'm just playing hooky, so I'm calling you from my house.
Okay. You got some money burning a hole in your pocket?
No, I'm still, I wish. I'm still looking at Intel, and
yep.
I know there's some positive news, and maybe like indirect positive news on Intel today.
Yeah, that was, you got a little bit of two things. You've got Microsoft and Intel both having a little short squeeze out here today. And that's pretty much it. Not a lot of volume on either one of them. You got to get into this trade, you got to get your risk reward correct. Yeah. And the minimum you need is $20.10. And I would say that there's a 85-90% chance that you're getting $19.23 out of this.
Yeah, that's what I'm thinking. So I was thinking about trying to buy some options for like June, July time frame.
Yeah, I'm going to wait through this option expiration cycle. Okay. I've been looking at the options, and they basically show a close somewhere around 1550 on the S&P cash. Nobody is going way out on either side of this market.
Okay.
Which makes me think that they don't think that there's either a lot of upside or downside, at least through the next 10 days. And I'm going to see, we'll get more info tonight on that. but my guess is that we go up here today. It's very light volume. We probably pull back below 1565 tomorrow, and I suspect we're going to have a very low volume movement in this market over the next couple of days. Now, I could be wrong, and we'll probably know either late today with the close or if we get any kind of volume in, but most likely it's going to be by probably about 2 o'clock tomorrow. So I just say, you've got about a day here to find out whether or not we're going to break out. But we've got 2.2 billion shares here with, an hour and a half left to go. There's not a lot of volume. We're breaking all-time highs. And, anytime you see no volume, just go look at stocks like IBM that have broken out on no volume over the last few days, or weeks even, and they've come right back into these things. They have not broken out and started moving higher. I know IBM's coming up on earnings here, but there just hasn't been that kind of juice to drive these things much higher. They're just kind of hanging around here. Would I be shorting IBM? No, but I just don't think that there's that much in a lot of these out here. Yeah. Now, when we look at Microsoft, MSFT, has it really done anything other than had a little market gas out here today? And the answer is, this basically is, let's look at the retracements out here. Let me get out here. I mean, this has done exactly what it's supposed to do, and that's why I'm thinking any higher out here, and you really want to be looking at it. But are you familiar with confluence levels?
Yes.
Okay. Well, I'm showing one right now on Tiger TV, so you can go back and watch it later.
No, I'm watching it right now.
Okay.
I see that.
But, yeah, you're right in that lane. It went up to 1982 today. It's right at the top of that, which is 2981. And, I think you've got just about everything that you're looking for out of this move. And Microsoft, Intel will probably move just a little. I don't think you have it in TC. But you're up again. You're not going to have anything like that. Let me get just a shorter time frame out here. This thing is just nothing but in a trading range between the high 21s or 22 and $20.80 or something, and you just don't have any real signal one way or the other. I'm still thinking that we're going to get a fairly decent pullback in this market until we see some volume. And, do we see 1590 and then wake up one day and it's 1520 the next day in the S&P? I'm not sure. But that would be my big worry with no volume up here. There's all this talk of all these people pouring into the marketplace. I just don't see it in the volume.
Yeah.
So I think we're going to be in for a fairly decent correction. And again, like I said, I was looking at it was a Fact Check. I think Fact Check's the organization that goes through, and they're basically predicting instead of the 2% upside over all the earnings in the S&P 500, down 0.5%. And they're fairly accurate. So I'm expecting more news like we saw out of Caterpillar, even though it's bouncing today, or was earlier. And some of these other companies, UPS, FedEx, everybody that's saying the international marketplace is pulling back. There are a lot of these stocks. In fact, I'll talk about it during the bottom half. But there's a lot of stocks that don't have that much upside to really significant resistance. Caterpillar is one of those. We'll show you what really good confluence looks like when we come back. Thanks for the call, Max.
All right. Thank you. Appreciate it.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we were talking a little bit about Confluence. Just because of the market conditions, we haven't had a good opportunity to talk about Confluence in a long time. We were looking at it, and Apple, I think I talked about it as it pulled back into the 435 level, and we were looking for support somewhere in there to begin with. You know, we look at ABC projections too. Confluence is a good tool. Confluence is when two different Fibonacci retracement ratios come together, and we look at the difference between the 381 of one and the 618 of the other, 382 actually. And those between those lines, if you're watching on Tiger TV now, will form a area. Sometimes those areas are big and fat. Sometimes they're extremely narrow. What you want is over time, and you want them to be as narrow as possible. The fatter they get, the less predictive that they are. But pretty nice. We're probably seeing right at the area of support in IBM when we've talked about that. That goes from about 204 to 206.5, something like that, 207. We got to 206.34 and kind of bounced in those range. You can get an idea of where support levels are going to be from multiple moves. What were we talking about? Mike, what were we talking about that had really good? I can't even remember. Was it Intel? Let's see. No. MSFT. I'm losing my mind here. I can't remember what we were talking about before. Microsoft, not really. Now, like all things, I'll think about it probably when the show is over. We'll be bringing it up again. But what we want to look at some of these stocks and the movements in them. I wanted to take another look. I know what it was. It was Google. There we'll go. Somebody would be anyway, in Google, let's look at retracements out here. Not too bad, but we've got two levels where confluence comes in. The first one is far better, mostly because it is much narrower. The second band to the right out here, much wider. But if you take Fibonacci retracement ratios from the November 16th low of 2012, the January 22nd low of this year, and use your focal point in confluence from March 6th, you come up with a range that goes from about, what is that? I always hate reading those because these are the toughest ones, but they're about, 762 up to 780, is that right? 784. So those are pretty good indications of where you're going to find the first support levels on the way back down when you pretty much exclude volume from the calculation to begin with. You want to always be looking at the volume and actually see, if you're coming down on a great deal of energy, then it makes it a lot easier to break through those. But you have two levels. I suspect, though, that Google is headed back into this 705 to 730 area, and we'll probably get some bounces out as we go sideways. Google has probably one big problem, and that is Motorola. It is still a $10 billion stake in a company that they have to put $1 billion of cash into a year that they continue to lose money on. And it's a lot more of that's going to hit this market. Still probably one of the best and strongest tech companies in the marketplace at the moment, but they too have additional problems. I'm continuing to look for and think that if you are a person looking at buying Google, your first opportunity would be somewhere around that probably 720, 715 range. Probably going to get a spike down there intraday, and that would probably be the best chance to be buying some of these tech companies, or the big expensive tech companies again. Apple, when we look at it, has a whole host of support resistance levels with confluence on the way back up. But we are getting ready to go back and test this $419 low from March 4th out here. Volume continues to be low. Let me turn these off and zoom in here a little bit. And, we're kind of in those lower range out there. We still haven't hit and tested that. I suspect we're going to get it. Let me take a look real quick. And what do we get down to 422 today? Apple's printing off at 426.34. But what do we got for volume? 7.5 million shares. Still not a great deal of volume out here. This is probably not setting up too bad. If we don't get a major pullback in the market, Apple is setting up for a fairly decent move. You could probably buy it somewhere around the 435 level with a close back above 435, and looking for maybe 496 at the high end here. But you're going to have some tough sledding to go through as it goes through lots of resistance levels. But I suspect it could get back in that 496 level, which is a previous gap down that started this huge level. But there's like two gaps in that price range, and I think that's a pretty good indication that you'd find some issues there. We've been watching MCP, thinking that this thing was getting very close to coming back down and making a low. Let's get a little shorter time span here. so we can look at it just a little bit better. What we did do is get down to the $5 area, $4.87, and the volume was lighter than the $5.66, 60 cents. Actually, you could say that you have a possible buy signal on Molycorp out here. I would suspect, though, we're still going to need 2-3 more months of consolidation at these levels to shake out the weakest hands before this thing significantly moves up. But the leader of the NASDAQ 100, yes, it's in the NASDAQ 100, Molycorp, kind of interesting. So we will be watching that. Other big movers in the NASDAQ today are Cree. Nice little pop out here. Most of these look to me from the action intraday to be short covering squeezes. They started off lower today. Most of this volume and movement came in from about noon to 1 o'clock. And probably not a whole lot of reason other than probably a few people bought and some shorts blinked. But volume is not all that exquisite in something like Cree out here. But what do we got out here today? 1.7 billion shares, or million shares, excuse me. Looks like it's going to probably go test the March 22nd high. So we'll continue to look at that. Anyway, we've got plenty of time here if you want to give me a call. 877-927-6648. 877-927-6648. We'll be able to take your call. Update here and just see if we got any more volume. 2.3 billion shares so far, 1573 on the S&P cash. If we do close up here today, your next target would be probably something like 1593 on the S&P cash. So we got about 20 points higher out here, depending on how we close. But 2.3 billion shares still very, very light. Okay, what else do we have out here? Buffalo Wild Wings. Of course, Monday night was the end of the Final Four, and you're probably looking at Buffalo Wild Wings not having a lot of additional business until, I guess, normally wraps up into the World Series and playoff games for baseball. So you don't have a whole lot between now and then. Buffalo Wild Wings looking more cyclical every year that it trades. Let's go back here just a little longer. You know, the volume wasn't too bad on the last spike up here on April 3rd to $90.39. So it could still get up to that $94 level. But we'll have to watch it closely. Probably a lot of what's going on in the marketplace will be driving it. Just this last leg, not tremendously exciting, but you know, 20% cheaper on chicken wings may be everything that they need to get that one little leg moving up out here. Yeah, S&P up 10 points today. Still 2.3 billion shares. Not enough to get me all excited out here. So what else do we have going on? I wanted to look at some other stocks in the index here that were moving. So let me pull those back up. Netflix is kind of interesting. I've been thinking that this would be one of the generational shorts if you could ever get it on at the right price for Netflix. It has pulled back a little bit. Actually, the huge markup suggests that this thing wants to get back to about $140, $135, probably in this gap somewhere. You're going to have pretty huge support. This continues to be incredibly have a high short interest also, which is going to make it very tough. If you can get one more time back up at the highs out here, this one looks like you might get the kind of move that you want out here. But my guess is that Icon is probably selling into this move of some level, and we're going to see how that plays out. Go Flash, go. Okay. What else are we looking at out here? Gold, Checkpoint Software up 3%. CHKP. CHKP. A little bounce out of Checkpoint Software. I think we've covered this a few times. It still has a high volume low out at October 18th low. That comes in at 6.9 million shares. A little bounce back up here in Checkpoint today. Still would want to be looking at that. We've got a phone call, and we're going to go to Tom in New Jersey, how you doing today?
Good. Is NVIDIA a buy? They got like $7 in cash a share. They're trading in $12 range.
They are not a buy. They're a buyout candidate, and that's about it. You're either going to make it all in one day, or you're not going to make it. The problem,
got a lot of cash and no debt, though.
Yeah, but they got nowhere to go.
Why? Because Qualcomm's going to take over their place or something. I heard on the next phone or something.
Now, all the money being made for graphic video chips is mostly being made in the cell phone or the smartphone part of the business right now, and you need somebody like Qualcomm or Intel or somebody like that to partner up with you, so you get both the processor business and the graphic accelerator part of the business both. And NVIDIA just has such a small part of that business, it's going to be hard for them to continue to compete against the bigger players out there.
Do you think Intel's a buy with a 4.5% dividend, or wait until it gets down to 19?
I'm thinking it's going to hit 19. I think they've got
lousy earnings.
Yeah, I think you got one more quarter of bad PC sales out there, and then I think the PC sales bottom, and then you're going to see a lot of the other stuff. Intel's
seems like the money is moving there today.
Huh?
It looks like they're shaking the jello today and moving, making that go up so the Dow goes up.
I don't know if it's so much of that. I just think there were probably a lot of shorts out here. And
what about the summer? That's going to be a time to buy. When would you buy it?
Yeah, I think they got a lot of new products coming out about midsummer, and that means the products are going to come out in the fall. You've got about a 6-month lead normally in the stock market on it, and I think that timing looks...
What about the 50-day and 20-day, 100 and 200 are all coming together, all those lines?
I can give you huge amounts of work that's been done on 50 and 200-day moving averages.
Don't mean nothing?
Yes.
So you would say their earnings are going to suck and then buy it?
No, I think they're going to just be a little disappointing. I don't think they're going to totally suck. They still have a huge amount of high-end business out there for servers and all that stuff. It's the PC low-end consumer business that's really why they're hurting right now. And if people have $500, they're going out and buy a tablet. They're not buying a new PC. One of the things that I talked about also on Monday's show, the end of XP, that you won't be able to upgrade it. We're down to the last 365 days of support for XP.
April 4th is the last day for security too. They're not gonna.
Yeah, so we're in that whole point of there's going to be a forced upgrade for people out there, and to me, I think you get within about 6 months of that, you're going to get the PC business coming back in Intel, and you're also going to get their big foray into going after Qualcomm and those companies. So still good business. Are you still there? No, fell off for some reason. So anyway, just a little patience on a lot of these companies, I think, is what you're looking. But NVIDIA does not have a dance partner. That was always the problem. You needed both the processor side of the business and the graphics accelerator part of the business. Probably the biggest thing that hurt NVIDIA was both Intel and AMD, including the graphic processors, or at least basic video processors in the CPUs themselves. They're called GPUs, right? Graphic processor units. AMD came out with theirs, had some problems, and that pretty much put them in the back seat to Intel on that business. Intel, probably AMD is going to be hanging out mostly on the Xbox and other applications for low or inexpensive x86 and x64 version processors, but I don't see a lot of stuff out of them either. Anyway, we'll be back. Thanks for the call, Tom, and we'll be back in a minute to wrap up the show.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
And we're cresting, just getting to 2.4 billion shares on the consolidated New York Stock Exchange tape. You'd like to see somewhere around 5 to 6 billion shares up here at these levels. We're not getting anywhere close to that. It makes me incredibly nervous. So we'll have to do that. Got a couple shorts on. They're doing okay. One's not doing okay. 4 or so. So not feeling too bad. I suspect that the part of this is options expiration. We'll probably see that over by 2 o'clock tomorrow afternoon. And if we're still seeing prices in excess of 1566 on the S&P cash, maybe an indication that we are going to continue to crawl up to 1590, 1593, which would be a lot of predictions for the end of a blow-off top in the S&P cash. So we'll be watching that over the next day or so. I'm not expecting any kind of huge intraday moves tomorrow. The options pretty much are showing a expiration a week from Friday at 1550. Nobody's making any real big bets on one side or the other of the market out here, either long or short, which makes me think that at least the option market makers are suspecting that we don't go very far very fast. So maybe sell off a little bit between now and a week from Friday, and maybe that starts the move back down and the correction, which everybody thinks is probably fairly close. I continue to watch the summation index. It continues to head lower. Let me put it this way, less and less stocks continue to participate as we go higher. We continue to see stocks like Google, Apple, IBM. All these stocks are not really doing much out here. And Techland is actually very interesting. I mean, we're basically flat on Apple today, 48 cents on IBM. IBM has pulled back out of those highs, even stocks like Amazon pretty much stuck in a very narrow trading range, and the rest of them, what can you say? So we'll look at it. There was I wanted to look at some other stocks out here before we had the end of the day. Wanted to see what else we had out here. Microsoft, Intel, both up, 3.5%. But I suspect a lot of that is short covering. I wanted to look at STX before the end of the day. Another one that's up in the 3% range. This one's getting awful close to testing its high, and this is the one I've been waiting for out here. We're going to test clicking on the wrong thing, going to test the $37.94 high from January 23rd that had 11 million shares. So far, not a lot of juice back into that high. We're looking at it today in 3.5 million shares going into that 11 million share high. We also had a gap down. This is testing today that had 16.6 million shares, and again we're back into that with 3.6 million shares. So whether we're looking at the top and this thing tags it and or filling a gap out here with a very light volume, we're seeing a lot of these tech companies, even the ones out here testing previous highs, not showing a lot of guts and glory. It's the Dodge. I've probably heard that Dodge commercial now long enough. Guts, glory, Dodge. Anyway, or Ram, that's what it is. I heard it enough that is getting through to me. But Seagate Technology, another one where I want to be watching out here. Some of the other ones out here, NVIDIA not doing much. Cisco it's up 47 cents. What can you say? I suspect we're going to have a very clear picture of this market by 2 o'clock tomorrow as we get in and through options expiration, delta rollover, delta neutral in these option market makers. Anyway, you can always catch me at same bat channel, same bat time, 2 to 3 here at tfnn.com. See you tomorrow.